Hello everyone, and welcome back to the channel. If you've been following the Australian stock market this week, you'll know it's been another fascinating few days for investors. Mining stocks have faced pressure, healthcare has shown resilience, technology continues to attract attention, and global events are keeping volatility alive. Today we'll cover what happened on the ASX this week, which sectors performed best and worst, the biggest stock stories, global events affecting Australian investors, 3 opportunities and risks to watch next week, and finally, I'll share my thoughts on what long-term investors should be focusing on. Let's dive in. This week highlighted one important investing lesson. Not every part of the market moves together. The ASX experienced mixed trading as investors balanced several competing themes. On one side, weaker commodity prices created selling pressure across the mining sector. Iron ore prices softened, which affected Australia's largest companies including BHP, Rio Tinto and Fortescue. Because these companies make up such a significant part of the ASX 200, weakness in mining can influence the entire market. Meanwhile, healthcare stocks remained relatively strong. Companies with stable earnings and global businesses attracted investor interest. Technology stocks also continued to recover after previous market weakness. The big takeaway? Investors are becoming much more selective. Rather than buying the whole market, money is flowing towards businesses with strong earnings growth and solid long-term prospects. Let's break down the sectors, starting with mining. The materials sector had a challenging week. Iron ore prices remain a major concern because China's economy continues to face uncertainty. Lower demand expectations can quickly affect Australia's biggest miners. Next, let's talk about banks. The major banks have had a remarkable run over recent years. However, investors are now questioning whether valuations have become stretched. Some profit-taking has emerged as investors rotate into other sectors. Healthcare remains one of the strongest defensive sectors. Large global businesses continue delivering stable earnings regardless of short-term economic cycles. Technology is another area attracting attention. Artificial intelligence and digital transformation remain long-term investment themes. Australian tech companies with strong international exposure continue generating investor interest. The Australian market doesn't operate in isolation. Several global factors influenced trading this week. First, China. China buys enormous amounts of Australian commodities. Any signs of stronger or weaker Chinese growth can directly affect mining stocks. Second, the United States. Investors continue monitoring inflation data and interest rate expectations. Higher US rates can influence global markets, including Australia. Third, oil prices and geopolitical tensions. Energy markets remain volatile. Unexpected developments can impact oil producers and transport companies. Finally, artificial intelligence investment. Global spending on AI infrastructure continues to grow rapidly. This trend supports technology companies and may create long-term opportunities for investors. Let's look at some major ASX names. BHP remains one of Australia's investment giants. Its performance depends heavily on commodity demand and iron ore prices. CSL continues to demonstrate why healthcare leaders are attractive long-term investments. Its diversified global operations provide stability during uncertain markets. Medicus remains one of the market's premium growth stocks. Investors continue watching whether earnings growth can justify its high valuation. The major banks continue attracting income investors through dividends, although valuations remain a discussion point. Meanwhile, technology businesses like WiseTech continue benefiting from digital transformation trends. Number 1. Commodity prices. If iron ore prices stabilise, Australia's mining giants could recover. If weakness continues, material stocks may remain under pressure. Number 2, economic data. Interest rate expectations remain one of the biggest drivers of market sentiment. Any surprises could affect banks, property stocks, and retailers. Number 3, company announcements. Earnings updates and trading guidance can create significant share price movements. Quality businesses that continue delivering earnings growth are likely to attract investor attention. One lesson stands out from this week's market action. Trying to predict every daily market movement is extremely difficult. Successful investors often focus on buying quality businesses, diversifying across sectors, thinking long-term, reinvesting dividends, and avoiding emotional decisions during market volatility. Short-term headlines come and go, but strong companies with sustainable competitive advantages have historically rewarded patient investors. So, to wrap things up, this week reminded us that the Australian market is being driven by a mix of commodity prices, global events, interest rate expectations, and company fundamentals. Mining remains important. Healthcare continues showing resilience. Technology offers long-term growth opportunities. And diversification remains one of the smartest strategies for managing risk.